All right, everyone, this is a video going over the new feature on the bold range algorithm. So I'm quickly going to just reminisce or go through what the current bold range does that you have, and then explain the difference with the update. So I'm actually going to enable this. This is the 35 tick that we're all pretty much used to, that we've been using a lot lately. So this is the 35 tick chart. My bold range is on. You can see it in the top left over here. And so let's talk about what we see on the chart. So this is the blue box, remember. So the way the current algorithm works on any chart, it doesn't matter what chart you're using, anytime the price of the product leaves the blue chart and makes a higher high, which means if it's leaving here, the candle, the second candle, then needs to make a higher high and it will take an entry. If you're talking about a short trade to the downside, then once it leaves the blue box to the downside, it would need to then make a lower low. In those instances, it will start a trade, just like it did in these instances. So when it starts to trade, obviously, ideally, we would love for it to go right to target like it did here yesterday on this first run on the 35 tick. It ran right to target. Oh, perfect. We love that. Then in this situation, and this is what I'm going to explain, this one took a little longer. And actually, it did get to target, but because I have the new feature on, it looks a little different. So we got long here. It pulled back a bit. Then it went higher, then it pulled back again, and then it finally went to target up in this area. And then this third one had a similar kind of movement where it got long right here when it left the blue range and it made a new high, but then it pulled back into the blue range. It pulled back, and then it finally came back out the blue range and it made a new high. And again, this was only within 6 minutes, so not a very long time, because if you've been running the 35 tick, you know it's very fast. And then in this instance, this was like the first trade where it left the blue range and then it went straight to target. So that's just kind of quickly going over what we currently have with the regular bold range, the original bold range. It leaves the blue box, it goes to target, or it has the potential to pull back within this whole blue area. If you're running the 15-minute, it's a little different, where the first target, if you have two targets on the current bold range, when the first target hits, your stop loss, because your stop loss is always on the opposite side down here, it is then moved from the opposite side to the middle of the range, or 50% of the range. But we don't have that on the 35 tick because we only have one target, which is why I say it's a little riskier. But this is why I have now implemented this new feature, which is called a break even. It's called break even. So there are two parts to it. Right here it says BE. Everything else is going to be exactly the same. So don't be confused on any of the other settings. They're all exactly the same. The only thing is I've added these two right here. It's going to say BE trigger and BE offset. BE stands for break even, and the word is exactly what it means. I want to move to break even, which means when we have a pullback like this, potentially I would have been stopped out here around the range for a very small loss or a break-even trade. The idea and concept behind a break-even is that I don't want these pullbacks. Like, I know they happen. I totally get it. It's not like I'm mad at the market. I know this is normal. But if we can avoid these pullbacks, especially the big ones like last Thursday where it goes like essentially all the way down here before it comes back up, that can be a little stressful, especially on new traders, and I want to avoid that as much as possible. So my thinking is this 35 tick, or some other tick setup, or maybe a Renko setup, they move quickly and they are ready. When they're ready to move, they're ready to move. So like in this instance, it came out the box, it was ready to go, right? This is what I want. But so when using a break-even offset, I can ideally just shoot for this, and when I don't get this and I end up getting this, I'm going to want to cut that right away for a very small loss or a very small gain or a break-even trade. Again, even if I have a break-even trade, there can be slippage. Remember, there is slippage in the market. The market moves fast. So you can, like, somebody may get out at $0. You may get out at -$5 or -$20. So also be aware of that. We're all not going to have the same exact results when it comes to something like this, where we're all trying to get out essentially in the same area. Kind of like even when we get in, we all have different entries. Some people are 1 tick away. Some people are a point away. But the idea is I'm trying to avoid the pullbacks or the huge losses as much as possible. Now, disclaimer, this is not going to guarantee anything. You are still going to have big pullbacks from every now and then. You're still going to have a full range loss every now and then. So it's going to somehow go out and not be triggered, and then for our offset, and then it's going to come all the way down and you're going to lose the whole range. That is still a risk. So I need everyone to be very aware of that. I know when I show the new data, it looks really like enticing. Oh, the biggest loss is $30. There's no pullback. There can definitely still be pullbacks. Number one, pullbacks are not recorded on the summary of the historical data. You have to go deeper into the historical data to actually see if there were pullbacks during the trade. The only thing the summary is showing you is how the trade ended. Did the trade end in a full profit? Did the trade end in a partial profit? Did the trade end in a small loss or a big loss? That's the only thing the summary is telling you. It will not tell you what happened during the trade. So if you want more information on that, reach out to me. I can help you to find that in the historical data. All right. But the idea is I don't want these pullbacks, and instead I want to get out at break even or a small loss or a small win, and then wait until it comes again. When it comes again, okay, I'm ready to get in again. Okay, and if it's still not ready, okay, then I'm going to get out at break even or offset or a small profit. Okay, and I'm going to wait for the next time. Okay, look, it pulls back here. It goes out again. This would be another trade. So yes, this is the new setup, is going to have many more trades, but it's hopefully, and that's why we're testing it, going to not have very large pullbacks and very large losses very often. So, and then in this time, okay, it came back in. Okay, it's ready to go. It goes right to profit. So essentially, I just want to take advantage of every time it leaves the range. I just want to get in. And if it's ready to run, cool. If it's not, cool. I'll take my small profit or my small loss and I'll wait for the next opportunity. So I hope that makes sense. That's the easiest way that I can explain it, because that's how I think of it in my head. So now let me show you. Let's go back to the actual setting. So the strategy itself. So let me unenable this. So again, there are 2 new added lines, which is the break-even trigger, the break-even offset. So what do these both mean and how do they work? The break-even trigger is essentially that. It is a trigger. When is this going to trigger? So you would then, what you would put here is the amount of ticks. So remember, a tick is one movement in that product. The amount of ticks you want the product to move before your stop loss is moved up from the back of the range. So in an instance like if and let me just change this here just for sakes. If my break-even trigger was 4, and that's a little close, we don't want to be too close because we don't want to be left with any kind of like weird issues with our stop losses. But if my break-even trigger was 4, this would mean once the NASDAQ left the blue box and it was green for 4 ticks, which is only 1 point, not very much at all, then my break-even offset would come into play. So then the code says, okay, where do you want to put your stop loss now? So your stop loss was at the back of the blue box. Where do you want your stop loss to go now? So then that is what this value is. So this value can be a 0, which would mean your exact entry of the trade, which is also called break even. This value can be negative and this value can be positive. If it is a negative value, that is going to be a red so that would be in the red, which would also mean in the blue box. So if you were in a long trade or a short trade and you're saying, okay, I want my stop loss to be moved to a -20, that would put you in the back, in the red, 20 ticks. That's where your stop loss would be. And if the trade pulls back and hits that 20 tick stop loss, you would then be red 20 ticks. If you want it 0, that would be break even, which would be your entry price. So even though you have your stop loss moved to break even, which is your entry price, again, there can be slippage. So if it hits your stop loss at break even, you could still have a -$5 trade. It's not always going to be exactly $0. So just be aware of that. Or you can make it a positive value. Obviously, you can't make it more than where the trigger is. You have to think about where the price is currently. So, and this is why I had a big value on the 35 tick, because it moves very fast. So if I say when the price goes green 50 ticks, which is a good amount, that's more than 5 points, I want my break even offset to go +5 ticks. That means I would be in the green. My stop loss is now in the green for 5 ticks, and it's a guaranteed green trade. But again, first the price has to go to 50 ticks. So let's see how some of these look on the chart. Let me enable this. So right now I have the 50 and the 5, and this is kind of what I had when I just first showed you guys. All right, so this one went right to target. This one was a break-even offset. So let's look at what it actually looks like so you can see. And again, it still had a pullback. Just be aware of that. So it got long right here. It went up a little bit, but the break-even, this was not 50 ticks, because if it was, it would have gotten out here. Pulled back, went into the green, still not 50 ticks, because if it pulled back here, this was our entry, it would have taken us out. Then at this point, it moved